Predicting. Predictable. Predictions.
Predict.
Predictable. Predictions. Predictable.
Predictive. Predictable.
Predictive Programming, episode 10, and we've got a guest today, our first virtual guest.
He better be good.
He's going to be good. That's why we bent the rules for him. It's Foster.
Hey, what's going on, guys? No promises on being good, but I'll try.
We're happy to have you. So, for those who don't know you, because a lot of people, I think, come from sports that are watching this, and you're obviously not into sports. Can you give a little background on who you are?
Sure. Full background. I've been into like gambling adjacent fields. You know, prediction markets aren't gambling, but I've been into gambling adjacent fields for a long time. I worked in a casino from like 2017 onward. I was in the gaming department. I was a blackjack dealer, pit boss, bunch of stuff, hopped all around. Then like last year on the election, I found out about prediction markets, fell in love with them. I found PMT's, prediction market traders, videos on YouTube, learned how to trade from him. Then we became buddies and started trading together. So as of January 1st, I quit my job and went all in on prediction markets. So I'm a full-time prediction market trader.
You were still a blackjack dealer?
Yeah, I was a blackjack dealer at that time.
Wow, okay.
So.
And you said you quit around January, so
Well,
almost a
yeah,
year
quit
now
or
you've been doing this
fired, you know,
full-time.
it's all the same. But
Yeah. Is your P&L public?
Yeah,
on
it is.
Calci and Poly?
Yep. I think I
What-
just broke 400,000 combined.
So probably a
Nice.
little bit better than a blackjack dealer salary.
Yeah, it is. And when I was blackjack dealing, I was just doing part-time on the weekends only because I wanted a lot of free time and I liked gaming. I still like gaming, so spent a lot of time on my computer. So
I will say my intro to Foster was, I think we had a clip from the show or something like that, and you commented something helpful about RFQs
Yeah.
and how they worked and what was on a WebSocket. And I just called you up on the
Yeah.
spot and started peppering you with questions, and you were just answering stuff, which was great.
yeah, I mean, at that time, I even remember I was looking back and I'm like, I think I gave them some wrong info because they ended up changing like some stuff around the multivariates from what it looked like. But hopefully, you guys got it figured out. Hopefully,
Are you quoting multivariates right now
Yes.
on any platforms?
I'm quoting only Kalshi. They just added multivariates for mention markets on Sunday or Thursday. Yeah, and I quoted them. I was like one of like 3 makers probably. That was really fun.
Okay, you do any volume on it?
Like a few $100s. It's really niche.
200.
Wait, your few $100 risk or their few $100 risk?
Their few $100 risk to like my like maybe $1,000 risk.
That's actually a little bit bigger than I would have thought.
Yeah.
And you're quoting multiple mention markets within the same speech or program or something. So there's some correlation factor.
There's only at the moment for mentions. There's only essentially same mention combos. You know, we're not or whatever. It's only for the same event. So it's typically the NFL announcer
Right,
markets. So yeah, there is some correlation. And then I quote NFL a good bit every Sunday. I just quote like starting from Saturday afternoon to Sunday and fill what I can on there.
Okay. Are you doing anything particularly proprietary, or are you just pulling kind of market average numbers?
I'm really just doing it's so crude, like just getting kind of like what a fair value is. And at that point, I'm really relying on the market to be accurate. You know, I'm not going to start quoting on Tuesday and then have lines move and get slammed by somebody who's sharp. I'm only quoting on like Saturday or Sunday, and then just multiplying all the probabilities. And then I started experimenting with some like correlation engines and APIs and like testing them and thinking of it myself. And I was like, you know what? I don't have the time for it. I got too many mentions to do. It's crazy. So.
Correlated mentions is very cool.
Yeah.
Can you do mentions with actual sports props? Like, could you do inches with the spread? Because like
That'd be sick.
a dog plus the points plus inches, right? You'd start thinking about like, you only care about these goal line stands if there's anything to play for. You know, like there might be a little bit of something going on.
I think, they might get there eventually as long as like there's people quoting it. And that's the main reason I quoted it is I wanted it to be successful because I wanted it to continue and I didn't want them to say, oh, this flopped. So I hope so. Cause I think of a bunch of different situations like, things like the over and wild hit being said probably might correlate with each other since there'd be more scores. There's so many cool directions that could go. But I have no
So
clue
hold
what's
on,
gonna happen.
you're a software developer, right? Like you're writing code to do a lot of this stuff.
Yeah. So like when I was a blackjack dealer, I was online a ton, and I just self-taught myself programming for, I don't know, web development, for game servers, anything like that. And then I started using that to make alerts and like all sorts of tooling for trading dimension markets. And in last fall, at the same time I found prediction markets, I also started going to college for software engineering to get a degree. And then
Was this your first time through college, or did you go to college? Okay.
it was my first time starting it, and then I did, that year, and then in the summertime I talked to my wife and I was like, this is kind of taking off. Like I don't want to go all in on prediction markets. So I continue for this fall. But
Okay. So when you graduated high school, you did not go to college.
Correct.
And you worked in the gaming industry,
Yeah.
including as a blackjack dealer.
Yeah.
And then kind of in parallel were exploring, like, were you vibe coding a lot of this stuff?
Yeah.
Did you start doing the coding in the AI era? Was there anything before
I started
that?
before the AI era, but that was just, it was similar in my opinion. It was just searching online and finding Stack Exchange and seeing people post code examples and then just tweaking it. Like it was like the old school vibe coding, I guess. But AI definitely helped me a lot, and I used it for.
And then you did a year or two of undergrad, and then realized I kind of know what I need to know to make money. I mean, to me, that is like the more complete story around all this stuff is some kind of intersection of the explosion of prediction markets and AI and a collapse of some of the traditional pathways. And it's a nebulous thing, and it feels almost like I'm like trying to be on all in or something. But it does seem to me like this recurring theme of people seeing the big picture and being like, I'm going to do just enough college and just enough vibe coding and I'll build this and I'll call this guy up and we'll figure it out. And all of a sudden, like, I'm climbing the leaderboards, and that part is really exciting to me.
Yeah.
Yeah, it was crazy. The leaderboards part is crazy. I used to look at like these big people on the leaderboards and be like, man, those guys are insane. I would never be like that. And now I'm on the all-time leaderboard on Kalshi, and it's like just unreal.
Yeah. It seems like a lot of money until it's your money and you're like, man, I need so much more money. I love money so much.
For real.
So can you talk a little about your non-RFQ, because he's going to get all nerdy about
I know,
his
coming up.
Your non-RFQ mentions, are you making both sides, just only taking positions for mentions? What are you doing there?
I'm not taking both sides. Usually I'm not market making. The only time I will take both sides is if I see like a piece of news, like this meeting that's going on, a big topic is supposed to be Israel. I would enter an Israel position, and then if it moves to where I think fair value is, then I would sell out. And then essentially I'm on both sides of it at that point. But for the most part,
That's what
go ahead.
that's what I was trying to ask about, because I'm curious about these mention market things. With sports, it's pretty easy. You kind of have an idea what the fair value is. But like for a mention market, will like someone say Israel? I don't know. What do you when you enter a trade? Do you think, I think this should be 80% and I'm buying 60 now, or do you kind of just like, this seems off, and then as the price increases, then you start thinking more and more about your fair? What's your process for kind of like that?
I'd say it's more the second one. It's a lot of times it's like, this doesn't seem right. And then, I try to be like, okay, well, why are people interpreting it the other way? Why is it underpriced right now? Because I've had a lot of times where I'm like, this is wrong. I slam into it. And then 5 minutes later, after just a little bit of thinking and checking, I'm like, oh, this is why it was priced this way. Like, I'm stupid. But like lately I've been trying to like derive my own fair value before I enter into a position, because if you enter into a position at like 60 cents and then it climbs to 80, like, and you didn't already assign a fair value in your head, you might be like, oh, this is great, I'm going to exit. And maybe the fair value would have assigned as like 90%. I don't know if that makes sense. Like, I feel like there's like some psychological aspect to it if you're not like putting it down. And I get really scared when I enter trades. Like I'm really risk averse. Like a lot of my styles are like really low risk in my opinion. Just don't put too much down. I do a lot of like really safe plays or a lot of low risk plays. Like most of my wins are buying at 1% and then winning on mistakes or rules arguments, stuff like that.
It makes sense. So then going back to that example, then with this, you buy at 60 cents, it moves to 80 cents,
Yep.
and you exit the position, but you would have assigned a fair value at 90. Are you then upset with yourself because you left 10 cents of value on the table by exiting, or are you like happy because you like now got 20 cents of value and you didn't have to write out the variance of being wrong because sometimes 10% of the time you will lose?
After the event, like if it resolved, yes, and it would have just paid out 100, I'll be like upset. I'm like, because I exit and I hedge out all the time when I'm trading sports, when I'm trading anything. I exit so quickly. I mean, I did it just a second ago. Right before I got on the call, there was a mention market going on, and I took some like crazy 1 cent shares and I sold them off at like 30 cents. They resolved at a dollar a share. So I would have like 100x'd right there. I still made $2,000. But like, I'm like bummed. Yeah, because I always am like, I should be thinking in terms of like the EV. I don't like let any sort of win blind me to like what I could have made or what I should be making.
One thing that happens though, mentioned markets are they trade relatively tight and are zero fee is my understanding right now, right?
They are zero maker fee. There is taker fees. So if you're
Okay.
doing somebody's ask, you're gonna pay like 1% probably. Or
Yeah,
1 cent a share.
I always forget it. Yeah. But it's not as punitive as sports is. Like sports, there's always historically been so much punishment for making a trade that it's like everybody raised on sports is completely allergic to closing a position. It's like you always ride out because it's so expensive to exit. That's been a tough thing for us, even like coaching people up on the idea of like you actually can just get off all this stuff at post because people are addicted to risk because they have to be. You can't win if you're not.
It's funny, like, because I remember Henry and I had a conversation, like, when Mamdani was in the primary versus Cuomo, I bought Cuomo at 43 cents the day before the election, and it quote unquote closed at 57 cents. So I was like, all right, great trade. But I thought the fair was around 55-ish, 53, but I didn't even think to sell my position. And Henry was like, you should have sold, like, but what about the fee? Oh, but there was no fees. Like that was like but like as like in sports, you pay 5% whenever you want, because you got to pay minus 110. So it's like very, very brutal. So can you talk a little bit, now we're talking sports, you said you were doing a little bit of sports. I want to hear about what you're doing in sports,
So
because that
like
excites me.
there was like a time when mention markets really slowed down. There wasn't much going on in like the Trump administration and politically, and there wasn't a lot of markets. So then at the same time, sports hit Kalshi like super hard. NFL came. I was like, you know what? I'm going to check this out. I started like watching the games and like watching how the price would move. And it's cool because it updates way faster than a sports book. It's in like odds that I'm used to. I hate American odds. Even decimal, like I'm like iffy on it. I'm gonna piss off a lot of people. Whatever. They're just stupid to me.
I love
like
American odds.
I love just seeing the win probability. 47%, 50%.
By the way, I can deal with probability. Decimal is the worst because decimal it is impossible to tell what the bid-ask spread is. The numbers are incoherent. It'll be like 1.5 and whatever.
Maybe that's just because I'm a blackjack dealer. I think of things in like multiples of bets. So like, so if I'm paying something now, it just seemed like way nicer to me. But so I would watch the lines move, and then I kept noticing like, and I would keep open like a book on the side, or I would keep open Polymarket. I was just monitoring like essentially like my own odds screen, but like just with a couple different platforms. And I would see like, okay, big play happens. Kalshi shoots to this price. Then the book closes the line, adjusts. I don't know how it works on a book's end, but it would close the line, pause, adjust. The new line would come, and then all the Kalshi people would like instantly just move to match the book because they're like, oh, we're wrong. The book's right. And I'm like, holy shit, that was like a 4-cent change. If I put down 10,000 shares, it's $400 if I can know when that's going to move. And that's kind of just what I started doing, like taking advantages of times where books, I'm assuming, are closing the line near the ends of the games, near like thresholds on like over-unders or big plays or anything like that. And so I would just find when they seem mispriced and take the position on it. There's a lot of examples.
So let's explain this a little more, because let you already leaked the edge. So let's completely explain what the edge leak looks like here. So that on Polymarket does have a speed bump, right? Or no?
Yes, 3 seconds.
Yeah, they have a 3-second speed bump.
Good.
Speed bump is traditional in sports markets because of the fact that 60,000 people are in a stadium watching this thing. You're never going to have a data feed that's faster than that. And a speed bump means in-play trades hit a speed bump where they're held for a few seconds before a take can actually execute. Kalshi has 0 speed bump.
Correct.
And so what you see is when there is a 50-yard pass, everybody who's sophisticated tries to get a directionally correct order out as fast as possible, right? So that's that. You were talking about that first wild swing from 50% to 70%.
Yeah.
It'll just be like this rubber band. Like, I know the probability went up. I'm just kind of sweeping the board with bids because I'm mostly trying to pick off stale makes as fast as possible. And I'm running a very unsophisticated model that, is just parsing Genius data or radar data as fast as I can to try and get to a number. And then when sportsbooks actually go off the board until they can run a real model and come up with a number. They come up with a real number, and there are varying opinions about who's good at this and who's bad at this. And then in the regimes you're talking about, like end of game scenarios, these numbers are very hard to make. It can be tough to algorithmically know, is this team now going to kneel it out? Is this player going to actually run into the end zone, or is he going to bend around and take a knee at the one? When they reopen, there often is another sweep on Kalshi to the number they're at, because the assumption is that initial spike was very naive and just kind of a board clearing maneuver. And this is the resolution. And so you can monitor for that first spike and say, okay, I'm now going to quote a huge width where there's no chance I get really picked off myself, but that I can kind of be prepared for a rebound or something like that. So that's an interesting idea. It's there's so much downstream of this, of these approaches. You were talking to us before the show about last night. The Raiders game was kind of a good example, right? Monday Night Football, Cowboys Raiders. What happened at the end of that game?
I think Raiders turned it over on downs at like their own 20-yard line. So Cowboys get the ball. So immediately people are like, "Oh, Cowboys are going to score." I don't know what happens on the books. I didn't watch it exactly. I became aware of it a little late, but all of a sudden, like, the over moves, the spread moves, people are anticipating Cowboys to score again. So, Las Vegas was down 17, so Vegas 17 plus 17.5, like, shot way down, super cheap. And then
can Dallas actually run it out, like run out the clock, or is there?
It was 2 minutes and 30 seconds.
But they're up so much, it's like, well, maybe Las Vegas will call the timeouts. Like, who cares? The game is over, right?
Exactly.
Yeah, okay.
So, and then, so they start kneeling it down instead of, like, attempting. They did a couple plays, made it to, like, the 5-yard line or something really close. Then they start kneeling it, but they're not going to be able to run out all the time. Maybe 40 seconds left. I can't remember exactly. But I was thinking, okay, well, on 4th down, are they going to kick the field goal or not? And I talked to a buddy who's like way smarter than me in terms of football. They're like, no, like it's going to be smarter to just turn it over on the 5-yard line, and Vegas will just end the game, whatever. But you could take Vegas plus 17.5 at like 55 cents. I think my first fill was, and then it moved to like 75, 80. And I filled a good bit at that. And then the book caught up or something, and it instantly moved to 90%. And this was after they had kneeled it twice. Then the book moved to 90% and I exited. It was just like a really quick flip, but a few $100s. It's like low-hanging fruit. It feels so stupid to like explain it.
No, but it's hard because, like, so Sean McVay, for instance, head coach of the Rams, is always kicking the field goal there. Always.
Okay.
He's like the king of backdoor margin.
Okay.
And in spots where it's like he almost kind of plays for a cover rather than to win a game, like down 9, with a minute, sort of drives into field goal range and kicks a field goal as time expires. He says it's because that point differential is like the 5th tiebreaker in playoff seeding or something. Yeah, but I feel like it's just for the fellas to like get the cover. But anyway, I always think of him as like the one polar example of like the points are coming.
You know, I think is a better example, not in NFL, in hockey. Whenever you have a team down 1 or 2, goalie pulls are. Every coach has a different goalie pull tendency. Some coaches down 1 will pull it 3 minutes. Some will pull it like a minute. Some will pull it 2. And like, if you pull it 3 minutes, you covering the -1.5 spread is now super likely because you have 3 minutes to get like a backdoor.
If you're down 2.
Sorry, no. If you're down, if you're down 1, the team up by if the team up by 1 has like 3 minutes to get the backdoor.
They're very likely to backdoor.
But if they're up against a coach that's going to pull it like 1 minute.
Yeah. The totals go way up.
Yeah,
too.
And like so, like you'll see like a ton of disagreement. And if you actually, I don't know ball at hockey at all, but if you actually paid attention and you knew every coaching tendency, this is like a huge angle you could exploit.
I was thinking about that just the other day about goalie pulls and like how they affect it near into the game. I was thinking about it now as NHL's picking up. I was like, man, I need to start trading that. Like that would be awesome. I mean, there's so many crazy things. There was the Eagles game on like Sunday. There was I think they gave it to like Saquon Barkley. He had like a 10-yard rush and he went down like legitimately like 2 inches from the goal line. And people were like trading the anytime touchdown market. Is it in? Is it going to get reversed? Like people are live trading and you're seeing it jumping. I'm like, this looks wrong. Well, I'm not going to trade if this is right or wrong. If the Eagles are at the 1-yard line, Hurts is going to push it in for a touchdown. I'm like, I'm just going to the Hurts anytime touchdown market. It was still stale at like, I don't know, 40 cents or whatever.
Oh my God.
Just like, I'm like, I'm going to take what's here a little bit. Like, it's just weird stuff like that.
I want to jump back to mention markets a little bit. So one thing people find in sports is that the end game of sports always involves market making to some degree. Like the biggest groups, and it can manifest in different ways with different degrees of legality or whatever. But sooner or later, if you want to be turning over millions daily, putting numbers up becomes a requirement to some degree. How, like on your journey and mentions as you're improving your numbers and improving your process, how much are you thinking about a possible end game where you are actually quoting these numbers and where you have to kind of be the mention end boss? Is that in your sights at all? And a follow-up question be, do you have any knowledge of who those players are currently? Do you think they're truly making? Do you think they need rebates to win? Like what does the state of that ecosystem look like on the maker side?
Okay, yeah, that's a really good question. I have started kind of branching into like deriving my own actual numbers and trying to make both sides when the time is right. Like I don't do it currently because most of the time the numbers just are so far from like where my fair value is. It's like okay, I'll put up a bid for no at like 28 cents. I think the fair value is at like 40. So then I'm going to make like, I put up a bid that low because I just don't want to slam all the orders. I'm getting filled at 28. I'm just going to take it. But I think eventually it'll get to that point because in the NFL announcer markets, a lot of things are a lot more based on like probability, like the probability of a team going to an end inches situation or, a doink or a face mask occurring. Like all those things are like a lot more probabilistic, I feel like. So that's where I'm starting to get my own numbers. I built out a really big data set for that kind of stuff. So I'm moving towards that. I think that the current makers for mentions, I have a lot of respect for them because I think that they just get slammed a lot of the time. I mean, obviously, people doing it during an event like live sniping or bonding is like huge because the market's still open when a speech is going on. But pre-game, I still think that they price stuff wrong a lot. I know that there's really only a couple groups doing it. Otherwise, it's mostly just counterparties. It feels like I'll talk in the Kalshi Discord. It's two different sharp people who are just disagreeing on a price and just matching against each other. So I don't know how big the market makers are for it. I've talked to Kalshi Trading, which is Kalshi's trading arm that's not directly affiliated, but somewhat like wants to empower the Kalshi markets. And I got a lot of respect for they make a lot of the mention markets, and if without them they would die. I don't think they're winning in mentions, but I think that they're surviving somewhat, or they wouldn't quote it as heavily.
Yeah.
I want to ask, what percent of your volume is maker versus taker? If you have a rough guess, or if you even know the exact.
Probably 60% taker, honestly.
Okay. And then what percent of your profits are maker versus taker?
95% taker.
I had a feeling.
Because
that was
what I'm known for, I guess, is catching people's mistakes. There's been times Trump has said Indiana and someone interpreted it as Canada or something in a badly mic'd up room or event, and they tried to live snipe. They bought Canada. Trump's going to say Canada to 99. I'm like, wait, this is wrong. I took no at 1 cent for 25,000 shares, and he didn't end up saying Canada the rest of the event. And, I went 250 to 25 grand. So that's just really biased, but I've done that 4 times now.
But there's a degree to which sitting there doing it is how you find that 4 times. But some groups even build the market making software because it's I need some fully automated system to be in place to even catch that every time, right? And then in the meantime, I'm just kind of quoting everything around 0% ROI or even marginally negative ROI just so I'm the guy, right? I run all these markets. It's me. And so when the opportunity is there, my thing is out there killing it. And yeah, I know in sports, like for us and for other groups, disproportionate ROI comes from aggressive trading, even if the majority of volume is passive trading. And so that's and I wonder, because you mentioned KT is the primary mention maker, would be my guess, and it sounds like your assumption. And so the more real sophisticated, trying to win third-party makers come on and add liquidity, the more I presume they will back off and widen.
Yeah.
And be we don't have to do this anymore. Our mandate to support the product is unwinding. And so it's there's in crypto they'll talk about a sell wall. It'll be hard to get past this price. Where I feel there's a similar kind of sell wall in a lot of these markets where as liquidity on boards, a lot of the existing liquidity is going to be so happy to get the fuck out of Dodge. And so it's going to take longer than you think to get there. But I don't think it's impossible, because you talked about some of these are very probabilistic and can be modeled in a repeatable way. And if you're oh, I hold 1% all NFL season, all NBA season, kind of posting the same numbers day after day, that is worth doing for a bunch of reasons.
If you don't mind me asking, what is your ROI? If you know, if you don't want to say,
I don't even know how I would calculate that. I guess it's hard to say because I'm in and out a lot of trades all of the time. I could just give you stats and maybe you could derive it yourself, if that makes sense. Let me see.
I guess what's your volume on Kalshi? So you have 400K profit. What's your volume? On
Kalshi? That's a good point. 7.6 million in volume. Since this year, it's kind of a tough.
So about 5.5.
Yeah.
Yeah, but that's
shares.
Average entry price is 50%, so that's 10% ROI on the handle, and half of it is exiting positions. That's actually smashing.
Yeah, that's fair.
Those are insane. You got to take more risks, Foster.
Oh, I know.
You got to get that. You got to get that margin down.
I 100% know. Somebody else brought that up. A big trader, Domer, brought that up in a podcast. He's I realized I'm only going up. I just need to take more risk. I'm leaving money on the table.
If you had Chris executing your exact same plays, you would know Cat be up maybe 600, 700
I have
at this
people
point.
say,
I'm being serious. When you just I'm totally ballparking it just based on what those numbers actually mean. If you had, if you were at a probably a lower sharp because of higher risk profile, so you're never eating fees or eating a lot less fees, and whatever, like it adds up. I mean, just even on our side as makers, like knowing users who use us as hedges, like whenever, because we lay arbs to soft books all the time, and they're like, you're my hedge, and they're, you know, the number still goes down. And when you see it at the end of the day, it's like, how valuable is hedging really? Like, was I actually facing risk of ruin? I'm not telling you what to do, but it's
The reason I was just asking is like, you know, look, even if like you were fully like taking risks, never closing up positions, and you got your IRR really low, and it was like, it sounds like it'd still be like 5 to 7%, which is phenomenal. In market maker land, I'm dreaming if I get 2.5%, like, or 2% ROI, which just shows like the, you know, the difference between like, obviously though the volume of a maker is like multiple higher. I do want to ask about the Brian Armstrong situation.
Oh, you guys!
What are your general thoughts?
You guys missed it literally 30 minutes ago. Probably something 5 times, I won't say worse, 5 times crazier happened. But
what happened?
What happened?
Okay, so during Bill Ackman, who was doing some sort of announcement on a company he's a part of, I genuinely have no clue, but there's a market. What is he going to say during this Twitter space? Twitter Spaces is like a group chat. Anybody can join the call and listen. Anybody can request to be a speaker, and he's taking speakers up from the audience. And I join in there and I see Polymarket badge, Kalshi badge, just tons of things.
Oh no.
And then he says, all right, I'm going to take up Easy Eats. And I know who this is. He streams himself trading mention markets on Polymarket. I'm like, oh my God. He comes up, he's like, you know, I love the company, I love what you're doing, but what do you think about your recent blowing up regarding your dating advice? I don't know if you guys have seen it. There's a big meme where he said say, can I meet you? May I meet you? Or whatever. He's like, how do you think it would work if you said, can I meet you? Instead of may I meet you? Would that have better luck? What do you think? Totally trying to get him to say it. And one of the strikes is, may I meet you?
Yeah.
And the
probably trading him like 6%, right?
It was trading like 30. It was trading actually pretty high, higher than I thought. I don't know.
They're pricing in the guy joining.
No, at that point, you had to. And then I'm like, what the hell? I go click on the market on Polymarket, top holders, number 4, Easy Eats, same profile picture. What the fuck? Bill Ackman responds, says, can I meet you? And he says, the other one, you know, I think the other one's better. Doesn't repeat, may I meet you? Then Easy Eats doubles down. And it's like, well, when's the last time you said, may I meet you? Or something like that. He's like, can you let me know like what it's like when you say it? And he just totally didn't do it. But he doubled down trying to get it to happen. It was unbelievable. And it shot to 99% because people anticipated 100% he was going to say it.
That's so funny because Bill Ackman also wrote a check to get himself into an ATP Challenger tennis event earlier this year. That similarly was like how do you make odds on this when this guy's 58 or something? Like they shouldn't win a single game except for his partner like hitting a bunch of aces. But on the other hand, everybody's going to go easy on him. It wasn't a rigged game, but it was like it didn't follow the regular rules. Yeah, it was basically an exhibition match in the middle of a real
There's
tournament.
a lot of discussion about that for the Battle of the Sexes tennis match about to go on. People are unsure how that's going to go.
Yeah.
But regarding the Brian Armstrong, I didn't really like it that much. At first, I thought it was hilarious. I was driving. First thing I did is call PMT. I'm like, you got to look at this. Like, this is insane. And then I realized, oh shit, we're screwed. Like, this is really bad for mention markets. And I think what happened today is bad.
Do you have any proposals to try and rectify stuff like that? Like, is there any rule change or directive that you think could reduce that friction of the party being aware of the market and actively saying or not saying something to influence the market?
I think we just got to focus on events that aren't going to be possibly influenced by like outsiders who might have more to gain. Like you guys have spoke about it as far as like, you know, when you have like Joe Buck, like how much money is going to have to be in a market for him to be influenced to say a certain thing. But, you know, as you get lower and lower, like in an earnings call, maybe it's happened where an analyst has asked a question and nobody even realized that they were trying to do it. I feel like an analyst would require less money. And then you get to Twitter Spaces, somebody's on an anonymous Twitter account, like there's no, they would do it for $50.
Yeah.
So wait. So I don't understand. Like, why do you think this Bill Ackman thing is bad? I hear this, and maybe I haven't thought about it enough. This doesn't strike me as bad because Bill Ackman wasn't compromised, and you have to know that people can join the spaces.
I guess
the
so.
market's got to price that in. If Bill Ackman has said, "Oh, you're trying to get the mention market," and then says it, that's awful. But what you described to me sounds actually pretty good. Like it's like the people are battling, and he even lost. So it's like seems like a win all around.
No, it is true because it's shot to 99. If you took no at 1 cent, then he didn't end up saying it the rest of the time. Like it was an interesting dynamic. I think it was just really weird since he held a position and it was public on Polymarket that he was holding the position. And I think Bill Ackman was aware of it. He had Polymarket come up as a co-host during the event.
Yeah, he knows what Polymarket is.
Yeah.
He's aware of that. I don't know if he knew there was a mention market going on it, but I don't know. Overall, it just feels like less. I don't know. It's less what I like to do. I like to think about what's going to go on during an event, not have to price in the odds of somebody actually being able to influence it. So my solution would just be let's just keep markets that have less possible influence from outsiders, like NFL announcer markets, Trump speeches, stuff like that. Seems better to me.
Oh yeah, I mean, good thing Trump has no influence on any outsider, anything like that.
No.
All right, we got to wrap it up. I got a last question.
Okay.
My last question is just next 6 months. What are you working on? What's the next horizon for you?
So I really have no idea because I don't know where this space is going to be. I constantly think my edge is drying up. I feel like I'm grabbing not low hanging fruits, just picking it up off the ground. This is really stupid stuff, and a lot of it I'm not going to talk about because I know if there was one other person that I would lose that edge immediately. So I don't talk about a lot of it or even post it. But I think prediction markets are going to blow up. Prize Picks just added Kalshi integration. Mention markets are tradable on Prize Picks, and so now I'm really just trying to size up, take a lot more risks. I really want to break 500K before the end of the year. That would be insane. And then, going into next year, I really just want to ramp it up because in 3.5 years, when the next administration's in, who knows where prediction markets are going to go. If Kalshi loses a court case and loses sports or, starts getting banned in states, that's my worst nightmare. The reason I'm so risk averse is I went all in on this. I got nothing else at the moment.
Well, would that not make you want to maximize your earn now
Exactly.
and be super aggressive now?
Yeah.
Go all in now.
That's what I'm transitioning to. If you could see my chart, it was this, and then I realized that, and now it's picking up the pace.
That's good.
I've had $200,000 months the last 2 months because I was I need to step it up because I don't know how long it's going to last. Before, I had my entire net worth, my Kalshi portfolio. Every dollar in my name is in there, and I'm when all of a sudden I see my available cash is $5,000 and all of my stuff is in positions, I'm holy shit, this is terrifying.